Hey Jennifer, we were talking about some challenging clients that you have had recently, and got me thinking, what is the one single thing that a homeowner or a prospective homeowner can do that will impact lowering their rates more than anything else?
In Kansas and Missouri, a prospective buyer needs to find out about the roof.
Okay.
If there's roof issues, if the roof's over 15 years, if there's any hail damage, they need to negotiate the roof before they purchase it. A current homeowner needs to look at their insurance renewals really closely. And also when you're quoting it out, you have to look really closely at different comparisons, because some insurance agents and insurance companies will have a wind and hail deductible. There are some companies in Kansas that require a $2,500 deductible on the roof automatically.
Okay.
So if you don't know what those deductibles are, or you're not sure how they play into a claim, some insurance companies have scheduled depreciation that they don't really mention it up front unless your agent is educating you. And an older roof, if it's over 10 years old and you're locked in with an insurance company, you may find it very hard to change your insurance after that period of time, because the older the roof gets, the less insurance companies are wanting to take those clients, or the higher the rates they get.
Because of the risk factors.
Because of the risk factors for wind and hail in the state, yes.
Okay.
It's a very serious issue to look at. It can save you thousands of dollars if you educate yourself up front instead of waiting to have a claim and be surprised.
Okay. So what other things affect a homeowner's rates?
It's the style of construction.
Okay.
A ranch home is going to have different pricing than a bi-level or a tri-level, because the design of the roof is more likely to possibly have leaks in those tri-levels.
Okay.
You are also going to find that you will have dogs be a big issue. I mean, people don't realize that 60% of all liability claims are dog bites.
Wow.
And insurance companies look at the breed of dog that you have.
Okay.
Sump pumps can be a big problem. If there's water losses on a house, if the sump pump can fail or back up and you don't have water sewer backup on your policy endorsed, most insurance companies don't sell it automatically, you may find yourself paying for a lot of cost in repairs.
Okay.
HVAC systems, plumbing, and electrical are huge. A home that was built prior to 1970, a lot of insurance companies won't want to insure them for a good price, because they think that older wiring is a fire hazard. The heating and air conditioning could be a carbon monoxide issue. But if the whole home has been updated, revamped, rewired, gutted, you can save tremendous cost if you find out about those things, educate your insurance company, and they'll give you discounts.
Okay. Yeah, I know that like the old knob and tube wiring and things like that. There are some things that I know, but I call you all the time to ask you questions. By the way, this is Jennifer Turner with Summit Insurance Group. She is my go-to person. She insures me personally, and anytime I have questions, she is the person that I ask. Another thing that comes up with home ownership is the security system. Does that really make that much difference in your insurance rates if you have a security system?
I'm an advocate for security systems in certain parts of town, just because they will help a client have less thefts and they will protect people. But yes, it can. It's not going to be as much as those security systems would like to sell you on, though.
Okay.
I mean, here's the thing. You might save $100 a year on a $200,000 home, but that monthly cost of having the system usually outweighs the discount.
Do you get a discount if you've got a system that's not monitored?
You can. Some insurance companies will give what's called a local discount versus a central alarm system discount, and it's not as significant, but I still highly recommend that some people look into those, because if you have a theft claim, you're going to have higher insurance rates, obviously, but not everybody needs a security system.
Okay.
Another thing to think about is there's a lot of folks out there that own guns, and you need to ask when you're doing your insurance, what is the gun coverage on the insurance policy, because some insurance companies limit it very small, and there's guys out there that are hunters that have some really nice equipment.
Absolutely.
And also when you're looking at security systems, really truly shop them out. There's a wide variety of difference in what they cost.
Okay, very good. And just one more question. I know, dealing in the world of real estate, that credit scores impact everything you do, and I know it has an impact on how insurance is priced, car insurance as well as auto insurance. If I have a client that's working on improving their credit, should they, when they get, are there certain markers where they should go and re-shop their insurance, or do they just wait till it renews and then shop it annually? Is there a rhyme or reason as to how that should work?
Well, it depends on the credit score itself. If a person is buying a home usually they're going to get hit with inquiries on their credit that's going to affect their rating.
Right.
And sometimes you'll find that a husband or a wife is the one that's actually buying the house, and the other one is just on there.
Sure.
And for insurance purposes, for liability purposes, the husband and a wife must be listed on the insurance together regardless of who's on the loan. Okay? It's very important legally. However, there may be the fact that one spouse has a better insurance credit score than the other one, and different insurance companies work at this differently. A lot of captive insurance companies are going to score both individuals, the husband and the wife, and they're going to take that credit tier score and combine it and then rate.
Okay.
There are some insurance companies that I represent also that will only use one credit score, and so if you look and see which one of them is tiered better, it can make a difference in pricing of $200, $300, $400 sometimes. And I will find there's different insurance companies out there that can be much more credit friendly than others.
Okay.
It's very good when you bought a home. I would wait maybe 2 years and possibly look at that again,
Okay.
because you might have a better credit score in that point in time. If you bought a bunch of cars or bought a lot of things, it can make a difference.
Okay, well, I appreciate that. Again, this is Jennifer Turner with Summit Insurance Group. If you have any questions for her, you can be reached at
816-524-0031 is my office, and you can also call me on my cell phone, which is 816-589-0714. Licensed in Kansas and Missouri, and I represent a wide variety of markets because I am an independent agency. So I work for my customer, not the insurance company.
Excellent. Thank you very much. And if you have any questions for me about real estate, give me a call at 816-877-8732. Thanks.
Thanks for the opportunity.